The Internal Revenue Service has announced several adjustments to account for the impact of inflation.
These include higher federal income tax brackets for the year 2023. Joining us now to break this down is CBS News MoneyWatch Associate Managing Editor Aimee Picchi. She wrote an article reporting on these changes from the IRS for CBSNews.com. Aimee, good to see you. How will tax brackets change next year for both individual and joint taxpayers?
Yeah, so it's kind of fascinating. What's happening is the agency is trying to avoid what they call bracket creep. So without such inflation adjustments, workers who got an annual cost of living pay increase could be pushed into a higher tax bracket, even though their standard of living didn't change at all. So that's particularly an issue this year because inflation's so high. The bottom line is what we're seeing is the IRS is adjusting tax brackets upwards by about 7%. So that means you need to earn about 7% more income to jump into a higher tax bracket. Now, tax experts tell me this could result in some tax savings for millions of taxpayers. For instance, a married couple with $200,000 in income will save about $900 in taxes next year due to these higher income limits for each bracket.
What other important adjustments are being enforced by the IRS next year?
Yeah, there are many of these provisions that are being changed for inflation. And one major one that impacts almost every taxpayer is the standard deduction. This is used by people who don't itemize their taxes, and that is the vast majority of most taxpayers. And this basically reduces the amount of income you must pay your taxes on. And that's also rising about 7%. So for instance, married couples next year can deduct $27,700 from their taxable income, up from about $25,900 this year. Another big provision that's changing are flexible spending accounts. This money is set aside to pay for your medical expenses. That's also getting a 7% boost. So you'll be able to set aside about $3,050 more in 2023 to cover your medical expenses. One thing to keep an eye on, though, is new limits for retirement accounts. Hasn't been announced yet. The IRS will adjust those upward for inflation, and it will probably be announced in the next couple of weeks. So you could save more for retirement last year, but we'll know more in a couple of weeks from the IRS on that.
All right, Aimee, bottom line, are these new changes truly reflective of the high inflation Americans are up against? Will they make a difference in our lives?
That's a great question. And the bottom line is that on average, it should help most taxpayers. We know the average worker saw wage gains of about 5% this year, which means that the bracket increases of about 7% will cover those higher wages. Of course, inflation is even higher than that. It's above 8% right now. So we know that those wage gains aren't keeping up with inflation. People are losing purchasing power. But at least when it comes to taxes, most taxpayers should see a break or at least break even next year thanks to these adjustments from the IRS.
And we said that this is for 2023, but it's for the 2022 tax year. Is that right, Aimee?
It's for 2023, so you will see these adjustments next
Still
year.
Have to wait. All right.
Worth the wait, though.
All right. Aimee Picchi, thank you.
Thank you.